Welcome back, everyone. This is the Justifiable Noise Project, and today we're going to be speaking about estate planning, in particular, life insurance. My guest today is Travis Hite. He is a life insurance agent with New York Life. And how you doing today, Travis?
Doing great, Andre. Doing great.
Very good, very good. Let's jump into this. Tell the people a little bit about yourself.
Been with New York Life 23 years now. Originally from North Carolina, Southern boy. Been in New York about, 30 some odd years. Live in Staten Island. And when it comes to my business practice, I direct my business at small business owners and individuals and families.
All right, beautiful, beautiful. So let me ask this very simple question. We're talking about estate planning and life insurance. Denzel Washington has a statement that he always likes to say, talk to me like I'm a 3-year-old. What is life insurance? talk to me like a 3-year-old. What is life insurance?
Well, what life insurance does, life insurance protects what can be protected. It puts money where money's not at. A lot of us in the African-American community, we don't really understand that concept because of our heritage and because of, you can say, the brainwashing of how we came in this society, how the life insurance industry wasn't really about us obtaining wealth or establishing estates. So life insurance basically will give you and protect your family from losing the house, keeping wealth in the house, dad or mom passes away. Now you have these funds that will come to you income tax free also. A lot of individuals don't understand that life insurance is income tax free coming to you. There's no taxes on it whatsoever.
Gotcha. And I was going to touch upon that, some of the benefits as we go on. If I think back in the day, though, there were many, if we speak about the African-American community, if I look back in the day, there were many folks that trusted, they had their bankers, they had, they had maybe the butcher, so on, but they trusted the life insurance man. They would purchase life insurance, and that way they knew, let's say, for instance, maybe for their final expenses, such as, funeral, cemetery, they knew that they were taken care of. So that was someone that they really trusted. And back in the day, the life insurance person would come around, and I'm going back in time. So if there's any millennials on here, they wouldn't know what this is, but it used to go door to door, knocking door to door. So it wasn't on the phone. It wasn't via the internet, direct sales. The life insurance agent would go around and knock door to door in the community and sell policies.
Yes.
So just talking about that, let's look at needs analysis. What's the major reasons for acquiring life insurance? Who needs it?
I feel everyone needs it.
Okay.
Think of it like this. We all are going to have a life change. When you're in high school, you're thinking about, finishing high school, going to college, and you're not really thinking about, life insurance. But as you become older, you're going to meet that girlfriend or that boyfriend. You're going to get married, have a kid, get your first place. That's when life insurance comes into effect because you're protecting your family and your wealth. So in a sense, everyone's going to need it. A business owner's going to need to protect his business. A family's going to need to protect the family, the home, the mortgage. If you have children, you want to get life insurance to make sure anything happens to you, your children's going to be taken care of from the standpoint of income that's going to be lost. So it's needed.
Okay.
But I'm sorry, go ahead, Andre.
No. Go ahead. Mike's yours.
Well, just to go back to what you're saying about how the insurance agent came to the house, I lived that life being down south by how this insurance agent had everybody in my neighborhood locked down. And he would park his car at the corner at my grandmother's house, and he would go door to door, everybody in the whole neighborhood from street to street. And this was like, let's give my age up. This was like in the late 60s, early 70s. And at the time, African Americans were only sold between $2,000 and $4,000, at the most $5,000 of life insurance. Because back in the day, you could buy a house for $20,000, $25,000 down south. So they only sold life insurance for final expenses, burial expenses. That was it. a person will be buried back in the day for $2,000, $2,500. But this is in the 60s and the 70s. That does not take place anymore. So that hurt us a lot.
Gotcha. Yeah, because you'd end up losing, let's say if it was your land or your home, or your farm, whatever, if you haven't already paid off those assets, you may end up losing, if you're the major breadwinner, you may end up losing whatever assets that you had.
Exactly.
Or have, for that fact.
Exactly.
So if we look at it, you say everybody needs it. So safely speaking, one would say then, a juvenile, a young child will need it. A college graduate will need it. A newly married couple will need it. A new family or existing family, seniors, a person that has no dependents.
I'll give you a perfect example of that. Someone would say, well, I feel it's kind of like, odd. I feel kind of strange getting insurance on, my child or my teenager. I don't want to put the curse on them. I've heard that before too.
Perfect.
And I will say to them this: I've come across individuals who did not know at the time what their health is going to be in the future. Because most people must think that when you get life insurance, you just sign application and that's it. No, it's based on your current health and your past health. So you have a child who could be prematurely, diabetic or have some kind of sickness or whatever. You don't know. Or even for yourself, you don't know what your health is going to be like. And insurance premiums are based on 3 dynamic things: age, sex, and your health. So the younger you are, the cheaper it is. And once you get that premium locked in, you're set. I mean, if we could spend money on a cell phone, you know what I'm going to say. If we could spend that $100 on a cell phone and fight for that cell phone. Everyone has insurance on their cars. And if something happens to your car, you're paying off your car. But no one wants to get insurance on themselves. What's the worth here? Where are we at?
That's interesting. Yeah, when you look at the expenses. So let me pivot there and say then, why are so many people ill prepared or underinsured?
I will say simply this: when I speak to most of the people in my community, it's a lack of education within the community. And I'm not blaming that on them. It's just what it is and where we're coming from. So you still have people with the mindset: give me enough insurance to bury myself with. And I don't want to get a lot because I don't want my kids rich. I want them to work the way I work to make it. I don't want to make anyone rich. It's not about making someone rich. It's about establishing an estate, a trust, a legacy for your family, making it so your children, your grandchildren can have not it easy, but be in a good place. Like you said earlier, we want to be able to pay off the house, not lose the house. So guess what? I don't have to buy a house now. Mom left me the house. If I don't want it, I can sell it and then get money by my own house because of life insurance.
So there again, we're looking at generational wealth. Yes. Although you will have some people, I'm glad that you're touching on, because folks don't, I'll just throw out there that I'm also an agent, and some of the things that you're saying are some of the things that I've heard, in the past, where I don't want to make my family rich. I want them to work hard and earn what they have coming to them. So I'm glad you mentioned it. There's a study by an organization called Life Happens, and they said 80% of the millennials choose not to purchase insurance because of other debts, rent, student loans, gas, food, or other obligations. What do you think about that?
I'm laughing because if they knew the price of getting they get $100,000 term policy, let's just speak frankly, and you're 20-something years of age, you're not even going to pay $20 a month. You're not going to pay $20 a month. You're not.
So just cut something out.
Living in New York and New Jersey, you don't have to cut nothing out. $20 is what you spend in a heartbeat. You go out for a drink. You go out for a drink with you and your girlfriend, you and your buddy, $20 is spent in 5 minutes. That's not
One
even infinity.
one drink is $15 to
Boom,
$20.
boom. Two drinks is $20 is gone. That's one sitting. Boom. We're speaking about the whole month. The whole month is less than $1 a day.
Correct.
And if you cannot understand or have that foresight to see how important it is living in the society we live in now, and how you need to prepare yourself, and you're gonna make an excuse about I got all these bills. Bills not going no place. It's about how you spend your extra money. And I learned something, as you probably know, being an agent. People got dough. They have money. It's where they want to spend their money.
So priorities.
It's exactly the priorities. That's what it is, priorities.
Priorities. I can remember as a young kid, maybe around 5, 6 years old, my mom took us to a cemetery. She was buying a plot, as well as later on that day, she bought life insurance. And I can remember just, in this big, 6 years old, everything is big. I'm like, what are we doing here? what are we doing here? I mean, I knew what the cemetery was because I had a teacher who was big on Edgar Allan Poe. So every time as we got around September, October, everything was scary. And, I just knew what the cemetery was. But I could not understand the purpose of life insurance at that very moment, much more a cemetery plot. As I got older, of course I did. And one of the greatest things, just that memory to keep it short, was when my mom passed, I remembered the name of the cemetery like that.
Wow.
Because of the business transactions that she made and made sure we were there.
Mm.
Yeah, very, very vivid in my mind. When I look at other reasons, people, some studies say people do not have insurance, they're ill-prepared, they're underinsured, they believe they have no dependents. They look at the cost. We covered that. Some people distrust insurance companies. And then lack of knowledge, as you mentioned. We talked about priorities. No dependence. How do you look at life insurance when the person says, "Hey, I really, I have some savings, I have no dependents." How do you look at that when a person says, I don't need insurance"?
Well, conceptually, I look at it from a standpoint of, I don't want any insurance, Travis. Why am I going to pay money for this insurance? So I show them a concept in which they can use their policy to help enhance their retirement income. If you have someone who has no dependents, they're making a decent income, they're putting their money in the bank, and they're earning no interest on it whatsoever. Savings account gives you what? 0.02, I don't know, something ridiculous.
Yeah.
I show them, if you can get you a whole life policy, where you're going to get about, my company, 3.2% annual rate of return, and you decide to do that, I show them a concept where they can actually dump money into their policy and have a great savings, have this life insurance policy. The money's going tax deferred and tax free. They can take money out of the policy and pay no income taxes whatsoever. Then when they get to that life change where they do need the insurance, it's already in place.
Gotcha.
Then I can also even take you to another step. We can customize it where they don't pay for their entire lives. Because a lot of people think when you get insurance, you pay for it until you die. That's back in the day companies, as you know.
Correct.
The companies now, you can get your policy and customize it and pay for it for 10, 15, 20 years, depending on how you want to customize it. So the industry has changed completely, but a lot of us don't know that.
Gotcha. We'll talk about that in just a moment. Fallacies of why one purchases life insurance. You touched on term insurance earlier. Term insurance is the best fit, cheaper, and my family lineage will, somebody will say, I'm only going to live till I'm about 65 years old.
Right, I've heard that before.
65 years old. So let me just, maybe I'll get term insurance because it's just the best fit for me. What do you say to that?
Oh, I got one even better. My grandfather lived to 90. My grandmother lived to 95. Or like you just said, so-and-so lived to 60. So I'm like, well, wow. So you can give me 2 examples of everyone in your family when they passed away or how long they lived. And it's going to happen to you. It won't. Or they may tell me, I don't need insurance to have a policy at my job, which is a company term policies. I don't need life insurance. I said, well, okay. If you can foresightly tell me when you're going to pass away and what's going to be needed, then I need to leave. And I need to leave, and you need to help me out and tell me about what's going on in my life. Because you can fairy tale so greatly, and you know these things. So now also tell them you shouldn't get insurance on your car. You should have no insurance. Because you probably know when you get in a car accident, you know everything. So you have insurance on your house? Don't get none. You need nothing.
There'll never be a fire.
No, it'll never be anything.
Correct.
And, it's frustrating because, I mean, no one wants to deal with their mortality. And I understand that. It's a scary thing to think about. When someone comes like me and you into their house and start talking about it, they don't want to deal with it. And, then they say, well, give me some cheap term, which is great, but term is only for a term. And you need to be prepared for after that term is over, because you're going to be older. It's going to cost you a lot. And then your insurability won't be as outstanding as it was earlier, because now you may have some medical conditions going on. And it's going to be really, really a lot of it. Premium's going to be very high.
So we look at the mortality tables and say, the average American male, and it varies, of course, based on race and various other factors. But we just take an average. The average male in the U.S. lives to about, say, 78. The average female will live to roughly about, say, 81. Mm-hmm. So, you really have to look at that, and you have to also then, throw in the fact that we have so many medical advances that, as you get older, especially if you're a younger person right now, you may live even longer. That mortality table, those numbers may increase over time. Right. And these were changed, I think, back around in the 90s, where was the latest change, and nothing's changed just yet. But I figure sometime in the 2020s, so to speak, the number should be going up just as well. Some people look at, let's say, for instance, another fallacy, whole life being some type of ripoff. It's so expensive versus term.
Right.
Why do that? I think you had touched on that earlier, just a little bit with respect to cash balances.
Right.
That's one of the fallacies out there. Sorry, go ahead.
I'm not going to say the whole life is cheap, because it is not. Correct. Cheap, but I'm going to say that you're paying for what you're going to get. And if you understand the contract, you are getting what you're paying for. A perfect example with any insurance, term or whole life, especially whole life. If you're paying for this, say $200 a month for this $100,000 policy or $20,000 policy, you say, oh, Mr. Hite, why are we paying that much money? It's just crazy. That's okay. It's based on life insurance. You're living. So if you keep living with this policy, between the 4th and 5th year, your cash value will equal what you pay annually. I can show charts of that. That's what's going to happen. The first couple of years of a whole life policy, you're paying the company, you're paying all those little, things you pay, expenses to have the policy, but you're building cash value. If you're dealing with a mutual company, you're getting dividends. Your death benefit is going to increase every year. So it ends up being an asset more than a deterrent of a bill. Because down the road, it'll come to a point where that cash value is going to be more every year than what you're paying every year. And it'll come to a point also where you don't have to pay any more premiums, because the dividend policy for you in like the 15th year in most cases, even earlier, if you set the policy up correctly.
So at some point you're saying that, definitely people can look at the cash value starting to pay for the policy itself. If
yes.
You're not taking money out.
Oh, no doubt. You'll see that. You'll be like, and I tell you, I have so many clients that have life-changing emergencies, or they need money, and they say, Travis, how much money I got in my policy? You got, 7, 8, 10,000. What? Are you serious? Like, yes. Oh my God. Well, my kids can ready to go to school. I need to get this. The car was in the shop. I'm like, hey, that's that life change. Well, how can I take the loan? How do I do it? So I go through that, how you do it, and the whole, basically how that's done this, they're like ecstatic.
Okay. Now you mentioned one thing regarding people that have insurance policies at work.
Yes.
Some people sometimes feel that those policies are suffice enough for them, but not looking for it, that if they happen to leave the job, maybe older policies, when you leave, they, you still get that as a fringe benefit. But,
Right.
People today, just like most people don't have pensions, they have 401ks and so on and so forth. But
Right.
today, if you're working somewhere, once you leave, that policy more than likely is not portable, and you're not able to sustain that afterwards.
Exactly.
So you generally tell people to either mimic what they have at work, or buy a separate policy as technically insurance for what they have once they retire.
Well, to piggyback off of that, if you're at your job is going to offer you a policy based on your salary. It can be based on 1 or 2 times your salary. That's it. It's not based on your mortgage. It's not based on the wife. It's not based on the 2 kids at college, what that need will be in case something happens. It's not based on that need. It's based on your salary. That's it.
Correct.
So when you leave your job, you're much older. Now you have no coverage, and you still have a need of a house and a wife. Maybe the kids are grown, but the need is still there. You have no coverage, and you're so much older, it's going to cost you so much. And if I can even go further, if there are any, individuals who listen to this who work for the city, bus drivers, MTA,
sanitation, police,
and especially sanitation, MTA, and they're like, hey, I got this, I'm getting ready to leave my job, I've got my pension, and I got this life insurance, and I'm kind of gonna go off course, but you're gonna find the meaning of it. I've come across a lot of my clients, and I'm dealing with someone now who has a pension, and he's trying to figure out, is he going to take 100% of his pension or put his wife down as a beneficiary? Then he's going to not get the full pension, maybe, 75% of it. And I said, well, I wish you would have got to me earlier. You're 50-something now, but I tell you this, take your full pension. He said, oh, I don't want to do that because now, my wife, something happens to her, me, what's going to happen? So look, if you're in great health, take your full pension, because if you look at the numbers, if you don't take it, you're going to lose between $400 to $600 a month by putting her down as beneficiary.
Correct.
What you do, take the full pension, between that $400 and $600, we'll use that to get your life insurance policy, right? You won't even need that much. Get your life insurance policy now. When something happens to you, instead of her getting $1,500 or $2,000 a month, which would be taxable to her, she'll get a lump sum, which will be non-taxable when you pass away. And you have your full pension. And you'll save a lot of money, and you'll live happily ever after.
Gotcha. And just to let our listeners know, the reason that Travis is mentioning that you should take the whole amount, you gave a great example there. In that scenario, what you were saying is, if you did it the other way, you're going to get less money.
Less.
And that's because that pension then has to stretch out for your wife, not just you. Yep. So that's why the payment would be actually less. We talked about people of color with regards to life insurance. We talked about back in the day, we talked about having more knowledge about what life insurance is. That may be some of the reasons that they're underinsured, not knowing, I should say. What are some of the things that you've heard over the years from clients when you first met them to eventually them taking out a policy and saying, oh, I really, really thank you a lot for doing this. And I draw this example only because I'll take it from the security side. The very first time I met someone, and I was going to sell them a municipal bond, and I talked about tax-free interest because the bonds were from within their state. The lady must have looked at me like I had 40 eyes. It's like, nobody gives anything for free. I took out the prospectus. I'm showing her. I says, I said, you know what? Versus putting $100,000 in, tell you what, start this one account with 25,000. You put the rest of that money inside your CD. And then at the end of the year, when you get your taxes, when you're prepared to do your taxes, let's match and see what happens.
Right.
That other 75,000 plus came the following year. And she thanked me. She says, you know, I just never known, I was never taught anything about investments, and we didn't really know, we didn't know each other. And here, you know, here you are is telling me that I'm going to get something for free. And I just didn't believe anything in life in this United States ever comes for free. What are some of the things that, you know, clients have told you after the fact regarding the life insurance that you sold them, and that they were very happy, but they, you know, they're glad that you brought them along for the ride, so to speak, to let them know why they needed it versus how they conceptualize what life insurance would be for them?
Well, I have several examples. One client of mine was a business owner. He had a term policy, and I had been trying to, for 3 years, get him to convert it to a whole life policy because he was getting older. He said, "Oh, I don't believe in insurance. You know, I don't believe in insurance." Finally, I don't know what happened. Called me up. We converted the policy. You know, yes, you know, 3 grown kids at the time. They were teenagers, wife, and he had like 4 different term policies. He does quite well for himself. We converted all 4 the whole life. We was dumping a little extra money into it so we could pay it off quicker and get this, you know, incredible cash ride, which he did. And 10 years passed. The 10th year, all the policy were able to pay for themselves. A month after that, his assistant calls me up, Miss Garage, he owns a garage in the Bronx, and says, well, I'm not gonna mention his name, but he's sick. He had a stroke, massive stroke. And, you know, he's in the hospital. He's going to be rehabbing. They don't know for how long. Long story short, this guy was in rehab for like 2 years, learning how to talk again, walk again, the whole 9. Wow. And if we wouldn't have did what we wouldn't have done at that time, because he didn't even have a disability waiver on his policies.
Okay.
He didn't have a waiver. He just would have lost it because he was about to lose it anyway because the term was about to end.
So a disability waiver for the listeners, just so that you know, that that's one of the options that you can include in case you can't pay for the premium, you know, the life insurance cost at that time because you're disabled. This would kick in for you.
Yes. And
it's
his wife
called the rider, but you pay a little bit more for that possibility.
A couple of dollars more, and his wife like thanked me. You know, I'm her new son, total 9. And, you know, whenever you're in the Bronx, come by and have dinner. It was just like, I'm her new, it was like, yeah. And he's better now, though. He's retired now, and, you know, he's great. Now, I have another client of mine who, they didn't believe in life insurance, but, you know, finally got the couple to do it. They had 2 young kids, and they had a 529 plan, but they showed me the paperwork for it. It really wasn't doing that well. It was really, they only put like $3 in a month. And once we went over the paperwork, as you know, and they saw the charges, it was like, wow, we're not really making any money because the charges are taking away any interest we're making, the charges, because we're only putting $3 in a month per kid. Mm-hmm. So we redid some things. We transferred the money out of there, did it for like 5 years, and put into this custom whole life policy. And we set up for until the kids got ready to go to college. At the time, I met them, they were 4. So we set up to do a 14-year plan. So the time the kids got ready to go to school, you know, they were like, whoa, you know, the policy, no more payments. And what they were amazed was that after they stopped with the payments, the policy cash value stock was still growing because of compounding interest.
Correct.
And they were like, what? We're getting compounding interest on the total amount every year and it's still growing. We can take money out, we can put it back in. You know, there's a little interest on the loan, but it's hardly nothing compared to what we're making here. So they were like, you know, they couldn't believe it. You know, we didn't believe you, even though you showed us perspective, you gave us illustrations, we just couldn't believe it. You know, so yeah, it was, you know, those are things that make you feel good. It was great. It was great.
Good. All right. So Let's talk about some of the different types of life insurance. We've been throwing out some names here and there. Um, Tell us about term insurance.
Okay, term insurance, it's an insurance in which you are locked into a contract for a term. It's like renting. You rent an apartment, you may sign a lease for 2 to 3 years, and you're paying that rent for that time period to the person who owns that apartment, and you have a roof over your head, and you're covered for that term. So term insurance is the same thing. You get a term policy for 10 years, you pay a certain premium, and you're locked in for coverage for 10 years. There's no cash value, there's no dividends. Your death benefit stays the same the whole 10-year period. And after 10 years is over, the policy, depends on what company you're with, will renew itself. But when it does, after the 10 years, it's going to renew itself at the new age you are 10 years older. So now that premium is going to be much more because you're 10 years older. Or you can convert it to a whole life. We're going to that another time, but that's term. You're renting the policy. It's very inexpensive. You're just renting it for that time period.
Level term versus increasing premium term.
Ooh, increasing premium term. Increasing premium term is a contract. It could be every year your premium increases. The difference is a level. The increasing one's much cheaper from the onset. It's a cheaper premium, but every year it increases every year. Conceptually, when you decide to convert that policy, the company will let you take a part of the premiums you've paid during that time period and roll it into the new contract. Depends on the year of inception. So the first year you was paying maybe $300 for the whole year. They'll let you take that $300 and convert it over into the new premium of the whole life policy at that time. So it's convertible, but you do get something back from it. But every year, the premium goes up every year, but it starts out much cheaper than a level.
Gotcha. Simplified insurance. I guess that, if you look at that in general terms, I'll let you talk about
it. Simplified insurance. You mean whole life?
Another name for it, yes.
Whole life, simplified insurance, permanent insurance. Oldest insurance ever. It was started back in the early mid-1800s as, it's called a fireman's insurance, because it started basically in New York with firemen who used to go to these homes back in Manhattan that were like infernos. Time you go in, the firemen never came back out because they weren't structured that way. So insurance companies started coming with insurance called fireman's insurance, which turned into life insurance, whole life. Now, whole life is based, same thing as term. The age you get it, whatever health you have, but that premium at that time is locked in. It never will increase on the lifetime of the policy. It's a locked in, guaranteed, permanent policy. Your death benefit will increase every year if the company's a mutual company giving you dividends. So your death benefit will increase. You get cash value after the second year. So you get cash value, dividends, you have a locked in premium, and it's a guaranteed contract. So If you're young and you get it, your premium is going to be low. You have to worry about nothing. It's locked in.
Gotcha. And since we're talking about whole life, there was something that you touched on earlier, in the sense that, hey, there's a way of getting whole life, and you only have to pay for a certain period of time. So you're looking also at what you would consider paid up insurance, so to speak.
Yes.
Correct.
Yes.
All right. Occasionally, I used to be in the bank program, so I'd see, your SBLI life insurance. They have these senior insurance plans. So if you're in good health and nothing has changed for the past, say, 2 years, you can get these small policies. They generally had death benefits of 5, 10, 15, max maybe $20,000, $25,000. Advisable? What do you think?
I'm not going to say the company's names, that sell them, but you see the commercials for them. They call guaranteed issue life policies.
Correct.
If you can answer 7 to 10 questions on applications, a guaranteed issue for you. Then, like you just said, 5, 10, 15 at the max, you get 20, 25,000. I think they fit a certain population. The population is over, say, 60. They have some health conditions like really high blood pressure. they're diabetic, but they're not really healthy with it, cholesterol issues, they could be overweight, and they come to me or maybe possibly come to you, we're going to be like, hey, we got to do blood and urine, we got to do a whole examination on you, we're going to rate you, and your premium is going to be like sky high. But you go to this company, they're not going to rate you. You're going to get a policy that's for final expenses. It's going to cost a little bit more than a basic whole life would cost with us, because now you're in a pool of everyone. They're not examining you, but you'll get a guaranteed issue. That dynamic, it works for them perfectly. And I've sold some of them before because it had to be done.
Correct. So in that sense, when you're looking at it, I guess one thing to throw out there for the listeners, if it be for themselves or for a family member, and this happens to be something that they were interested in, the death benefit is not whole. I shouldn't really use that term. Is not going to be paid in full if you don't live for the first 2 years of that.
Exactly.
That contract.
Great. Thank you, Andre. My fault.
You only receive a portion. So the main thing is you need to live at least say 2 years. Otherwise, you're only going to get a portion of that.
Exactly.
Whatever it is.
Right. Depending on the company, some companies will give you back, say, 25% of premiums paid into the policy. Depends on the company's contract.
Correct.
But you have to be, you cannot pass away, let's keep it for real. You cannot pass away the first 2 years. And it's written in small letters. You pass away the first 2 years, I'm sorry. Some companies give you back 0. Others will only give you like 25% of only premiums paid.
Correct.
Nothing to do with death benefit premiums paid. Now, all life insurance companies have a 2-year contestable period with any contract, which means that they're going to contest it the first 2 years, because when you first do the policy, you do the application, we ask you all these medical questions, we're doing blood and urine, and you've passed it, and everything is great, and then you pass away a year and a half later, we're going to question that. We're going to investigate that, because you're not supposed to pass away in that period of time. But you have a massive heart attack, stroke, you get killed in a car accident, and that's just what it is, we'll pay out the claim. But if you tell me that I don't use cocaine or drugs, you have a cocaine overdose, we're not going to pay you out. No.
Gotcha. Now, there's a few items that I want to touch on. I just want to be very brief about them, because generally I don't want to elaborate too much on them, but let's see if we can make a little headway in about a minute or two. Long-term care. What's your thoughts about that? We're in the New York City area where we're taping, and the cost for this particular product will vary.
Yes.
It is very expensive, but as depending on who's listening to this, that's why I figure I throw that out there.
Okay.
Just talk about long-term care for a quick minute.
Long-term care is based on your zip code. When you do a long-term contract, you put the zip code in, it gives us the cost. Your long-term care costs also, you can put in, based on your zip code, what the cost will be in your area. Some areas, the cost may be $225 or $250 a day to stay in this facility. You can have a long-term care where it can take care of your in and out of care, or someone come to your home to take care of you. You can be in a facility. It'll take care of the needs you have, wheelchair, any of those things. What happens if you don't have long-term care? It can wipe away all your assets you have.
Because you end up going utilizing Medicare, and yes. Medicare basically, what's the threshold on Medicare? Is it $2,000 or $5,000 max that they leave you with? So basically, they're taking all of Social Security and pensions.
Yes,
to pay for your care if you're in a skilled facility for home care or hospice care, whatever the case may be.
If you have assets, you own a home, you have assets, they're going to check into that, and they will start diminishing your assets to pay for that care. Point blank.
Correct. So, the reason that people purchase this type of insurance is basically so that they have the ability to utilize this type of life insurance to offset that care at any point in time. And generally, it generally can pay in many instances anywhere from 70 to in some cases, older contracts, 100% of
Yes.
the expenses. So I just wanted to mention that because as people get older, or people have these policies, may not know what it is, or it's offered at work. Many jobs aren't offering that any longer, but the premium is very high. And as Travis has mentioned, he says it's basically by zip code, because healthcare in this country is very, very expensive, very, very expensive. So I just wanted to touch on that very briefly. Let's jump into some of you, and you have already done this. You touched on some of the tax benefits of life insurance. We're not CPAs, but we can give you some information regarding life insurance and some of the benefits. You had touched on the cash distributions. Let's go, jump in there.
Let's really get deep into it. Say, for instance, you're a person of wealth. You want to make sure that you have a small estate, or you want to make sure that your family gets the money correctly. I've advised a lot of my clients what they can do. They can make the beneficiary of their life insurance policy a trust, a revocable trust, which will in turn keep your estate in order. You will not lose anything. And if you have kids, let's be frank, you have kids who are like, you know what, my kid's a little hard-headed. I don't trust them with the money and leaving them all this money. We'll have a kid, I want to make sure they have this money for college. You can have your trust designed where they're going to get funds based on if they hit certain goals. It's written in your trust.
Spendthrift provision.
Exactly. Also, you can set up your life insurance policies cash value that I can show you, or Andre can show you, a spreadsheet where you'll see exactly how much cash value you have in your policy through the years based on what you want to accomplish. Most people don't really understand it, but we can do that for you. Correct. So life insurance can, in certain cases, supplement retirement income. I have clients who are business owners who are not savvy in the market, so they use the life insurance policy to give them life insurance, protect their business, and give them retirement income, supplemental retirement income.
Gotcha.
Because when you take that money out, it's not taxed. It's a beautiful thing.
Correct. So one of the things that you also just want to draw upon, or definitely focus on for people when you get life insurance, the death benefit is tax-free. So it's something that you definitely have to be aware of. So you don't have to worry if your family's going to pay all this money. Are they going to receive all the money? The death benefit is tax-free. So yes. I think we've touched on enough there regarding the benefits. How do you usually calculate the insurance needs of an individual? And before you answer, I used to do something, it's kind of old school. And when you're selling, everything is visual, and you're talking about a benefit to someone, and people can't really see it. So what I would do, like in accounting, you draw up a T account. You have your debts, and you have your cash, which are your credit accounting. So I would draw up all of your debts and future expectations for your family. And then at the bottom, I have like part of a leg, which would be, for the money you want to leave, not a hangman, but the money you want to leave for your loved one, just because you love them.
Right.
How do you go about it? And of course, we have all kinds of models that allow us to actually create it. But sometimes when you want to just break it down in the simplest form, that was my way back in the day. But how do you assess the needs with clients when you're talking to them about life insurance?
Well, we have a needs analysis spreadsheet. We have a Social Security needs analysis spreadsheet. But I'm speaking to the average, my folk. I try to keep it as simple as possible. And I look at their income. I look at their, liquid net worth and their net worth. I look at their outstanding debts, future income possibilities, the children, and the household. And I kind of put it all out there on the table for them, and they put it out there for me. And I say to them simply, you see the numbers, what do you think? What should we do? Because when I'm working with a client, it's a team. We're a team here. I just don't want to tell you what I think, or what I'm telling you what you should do. I want you to see it. agree to it, give me the numbers. You say, you know what? This is what I need to happen. Based on the numbers you're showing me, the numbers I'm giving you, this is what we need to happen. Then we find the product, we make it happen. It's not really a complicated process to me because, I mean, if someone is making $100,000 a year, this is for an example, and they're in their 40s, and you can say, well, okay, you're making $100,000 a year. Ask anyone, how much money you bring home after you, at the end of the year from that 100? How much money you got? I'm like, well, I don't really have hardly no savings, because you live by how you make your money. You make 100,000, you can buy a car because you make a certain car, live in a certain place. So don't you want your family and your wife to live that same way? So how much that you're gonna need?
Correct.
You're like, wow, I didn't think of it like that. Because you can go through 100, my friend, like it's nothing to it. What is she gonna do now? And the kids and the bills, they don't disappear.
Perfect. And I tell everybody that, your bills don't disappear
No,
because you're not here any longer. And especially if you're married and everything was joint, everything follows somebody. Yes. Everything follows somebody. One thing I like to also throw in there, and I think maybe I'll start doing this from now on. Unfortunately, I took care of two aunts, and they both passed, say, roughly about, 3-4 years ago. And my father just recently passed. And when you go to a funeral home, and once you get past all the surface stuff, the first thing they take out is the product and service list.
That's a long list too.
And then you go through that list with them with regards to all the products and services that they provide, the mandatory things that they must do, and then you calculate everything up. So I think that everybody should be able to see that list. And I think what I'll start doing is carrying that list with me every time I meet someone and I'm talking about life insurance, so that they can look and say, hey, this is all the mandatory. I mean, if you look at the casket, okay, if you want to be real cheap on the casket, that's one thing. But the casket has to be entombed in something by state law.
Yeah.
That's another cost. The body has to be embalmed by a certain period of time. That's another cost. Even if you say, hey, we're comfortable with a modest funeral, one would say, hey, it doesn't mean that a modest funeral is that price that you gave back in the day of, say, $2,000. Your average funeral is somewhere between maybe $8,000 and $15,000.
Correct.
Somewhere in that ballpark. But I figure I'd share that.
Well, if I can piggyback on that.
Sure.
Most funeral homes, what they do, I'm going to say this, I don't like it. They will bring the family in. The first place, they'll show you around the funeral home, of course. Then take you directly downstairs to the caskets. And that's when the emotion starts really hitting the family, because they see the casket. Yeah. It's where mom and dad's going to be. And if the funeral home of course they know you have a life insurance policy, it's a wrap. They first take you to the most expensive casket. Well, this is airtight, stainless steel. We're going to put his name on the side of it. It's going to be like, and then, it's going to be this, going to be that. Oh, and the family's crying, and, this one's only 7,000 or 8,000 or 9,000. We're going to do this or that. Oh, then we have a special room. We can put him in a special room. That's a cost. We can do a video. That's a cost. Bring some pictures on, for him. You can have your repast. It's just cost. Or do you want us to dress him? That's a cost. How many limousines you want? That's a cost. How many people you need? Woo.
Yeah, it's a turnkey. It is a turnkey business, and I'm not knocking it. It's one of those things that has to be done, and people have to be aware of the cost. We're running up against the clock, so
okay, sir.
Let me jump into insurable risk. Now, there are some people who say, hey, I'm in good health, but I have a pre-existing condition. Now, people, you hear about pre-existing conditions when we're talking about politics right now. We have the presidential elections coming up. So
pre-existing conditions could be, you know, some type of cognitive impairment or a physical disability, depression, surgery, you know, heart disease, diabetes, kidney renal disease, cancer, autism, you know, HIV, AIDS, obesity. You may be a smoker. And one of the things that Travis was talking about earlier about rating, you know, if you're in very good health, let's say you're preferred plus.
Yep.
But if you have some type of pre-existing condition, now I'm mentioning these things, it doesn't disallow you from getting life insurance, but it will add to the cost. It will add to the cost. Yeah, I can remember many years ago, a young lady coming in, her father was a client of mine with securities, and she was like, you know, I have HIV, you know, will I be able to get insurance? Back then, because you're talking about roughly about, say, 15, 20 years ago,
nope,
couldn't get a policy. Now, there are some insurance carriers, you know, when it comes to, let's say, cancer, possibility just as well. So it can impact that. I think funny thing is, that I can say this is funny, if you travel to certain places, you may not be able to get insurance by certain companies. Some companies are very, you know, their underwriting process, their process that they go through to find out if you're insurable, they may not allow you. I can remember I had an underwriter who was from Colombia. The client was from Colombia. I was like, what do you mean you're not going to give them insurance?
Nope.
I fought and I got him the insurance. Mm-hmm. But, you know, he was looking at that time that, you know, people, citizens that would go back to their country, many times they were getting kidnapped. And that's why this one insurance company would not do it. But
we have a list of about 10 different countries where if you have any type of affiliation with that country, adios. We won't touch you with a 10-foot pole. Yeah. We're not.
And also your extracurricular activities. I used to, you know, if you jump out of planes, you know, if you recently jumped out of a plane, you know, that's something that may disallow you from getting life.
Hand gliding, rappelling from the side of mountains, mountain climbing, race car driving, snowmobile racing. Oh my God, there's
a list. And
yes, there's a list.
And as I said, from the pre-existing conditions, you know, don't let that dissuade you from getting insurance. Just find out what the extra or the added cost will be. And it just means, sorry, go ahead, Travis.
I'm sorry. We can always go to our underwriter with a pre-existing condition and ask them to give us a basic reading of what they'll probably get rated. I've been doing it so long, I kind of know what it will be right now. Anyway, so it says I have, you know, high blood pressure, cholesterol, and I'm like, what's your medication? How long you been on it? What's your age? And I can kind of give you a pre-existing rating based on my experience. But you're not uninsurable. You're going to get rated. But see, what's changed now is that if you have it under control, you're good to go.
Correct.
If you're taking medication for it, your weight is good, you're good to go. You'll get a non-smoker, maybe class 2, or maybe just a non-smoker. But if you have it is out of control, then you're going to get rated highly. It's going to be an issue because you're messing with your mortality.
Gotcha. And you know, since we're talking about the rating, just wanted to touch on the process, the underwriting process. I mean, the first thing is always getting the application and getting a payment. The next thing is we talk about is the medical exam. So the medical exam, you kind of touched on blood and urine. You may have to get a test on your heart. What other things would you look at during that paramedical exam? That someone would have to take.
The medical exam is based on the person's age and their face amount. If you're getting under 100,000, there's no blood and no urine, depends on your age. You just have to do what we call a paramedical, or we call a tele-interview, where someone will call you and do what we call a telephone interview and find out about your medical conditions that you tell them over the phone. Plus, what companies do now, they check the MIB, it's an MIB report, Medical Information Bureau report, where they can check and see if you've been hospitalized, if you've been in an emergency room. And we also look at RX. We can look and see all the medications you've ever been on.
Correct.
Once you give us your social security number, you sign off saying we can check these things, we check it. So you can sit there and lie to me about something, but we're going to find out who this are.
Used to have a rep that used to always say, hey, anytime I met with someone, I would ask them, how long have you been smoking?
Oh, I just started smoking 2 days ago. Well, I stopped last week. And then we go get your urine. Bro, you know you still smoking like a chimney.
A person asked me, they said, well, I live in Colorado. Weed is legal, so is it going to be a problem?
Oh, see, you know what? That's I don't know. I know this is a podcast, but I guess I can say this.
You can say anything you want.
I got clients who smoke weed. They get non-smoker. Do you know why they get non-smoker? Because when they wrap their weed, they don't wrap it in tobacco. They smoke it out of a pipe, or they wrap it in that paper, and it doesn't show up. Because weed is naturally coming from the earth.
Correct.
It don't show up. Now, people wrap it in tobacco, it shows up.
I see. Something to learn from. Something to learn from. Perfect.
Keep smoking weed, Andre.
All right. I had this interesting thought. What are things that agents can do to elevate the profile of life insurance? Life insurance isn't as sexy as saying, I'm going to buy shares of Tesla, Amazon, or Facebook. What can agents or the public do to elevate it? I thought about how churches can get more involved, funeral homes can get more involved, cemeteries, CPAs, attorneys, medical professionals, women's groups such as sororities, neighborhood groups, of course, employers and friends and family.
Well, back in the day, churches were the forefront because someone would pass away and they would leave like a whole row or a set of chairs and under the name of that person who passed away, or they would dedicate the piano to the church or whatever to the church because the church was so involved in the community, and the pastor must get insurance, and people would actually leave part of the benefit to the church. Because the church is a nonprofit organization, so they can leave 10-20% of the benefit to the church. So that was an incredible point. I guess a couple clients will do that now, but many clients don't go to church like they used to. So that's not the big thing now. Young people don't go to church like they used to. But to me, church, sororities, if they make it so, we're trying to establish the church, the sorority, to keep pushing on, leave some of that claim to our organization. You're leaving a lasting legacy in your name.
Makes sense. Definitely makes sense. I can remember back in the day, I told you how my mom, had gotten her cemetery plot and also the life insurance. And that was because all of the nurses at this particular hospital were getting life insurance. This one agent got all of the West Indian nurses to purchase life insurance. I kind of look at it, what's different versus today is, back in the day, you used to have those Tupperware parties and Avon at home. So I'm just curious as to what other things that could be done. I threw out a bunch of items.
Well, I've done seminars before at daycare centers, senior centers, churches, and they've been okay. I haven't been like a raving success because it really goes down to the basis of the individual and what they know about insurance. Some people are, insurance, oh boy. Like I'm like the Grim Reaper. Oh, the insurance guys coming in and talk about death. Get away from me. I'm like, oh man, okay, this is not good. But I feel that they sit and listen and really just listen and take it in. It's an incredible benefit because if you think about it, life insurance, most people think of it as a point of, I'm going to die and someone's going to benefit from my death. So it's like, oh, I don't want it. That's not, good with me because I'm a selfish person. Whatever, let's keep it real. But if you understand how the contract works, it has the living benefit, which is the cash value, and the dividends are in the policy. So you can benefit from it while you are alive.
There you go. All right. Very last question. This one I'm going to catch you off guard a little bit with.
Okay.
I'm sure that you have a great answer for it. When you speak to a young person, let's say, for instance, someone that may be about to graduate college or whatever, or looking to make a career change, what would you tell them about becoming a life insurance agent and why they should why they should do
it? You caught me off guard.
I mean,
Wow.
the insurance companies are definitely companies that come
Well,
up with campuses
well,
trying to recruit individuals.
okay. Podcast, no compliance here. No what?
No, no.
I'm keeping it for real. I would tell someone in their early 20s, do not do what I do.
Interesting.
Do you know why?
Why?
Okay. Your first client is going to be people who you know when you're 20 something. You're going to go to your friends, your family.
Low hanging fruit.
Right. Your friends ain't got no money. They just finished school living at home. They got no insurable interest or nothing. They still, mom and daddy got them a posse when they were little. They still living at home. They're not paying rent. So they ain't got no money. They're not going to believe it. They'll give you the hardest time. They're not going to do nothing for you. Then your friend's parents look at you as being, that's little Andre. Oh, he's want to sell me a policy. What does he know? He knows nothing. I remember taking him to school when he was little. I'm not going to let him know my business now about my finances. He's only 22 years of age. How can he advise me? He can't even advise himself.
Gotcha.
So, and if you're 20 something going to a 40 something, 50-year-old, telling them how they should spend their money, advise themselves and their family, like what experience you have doing that? So it's tough for a 20-something-year-old. I've advised and I've mentored many young kids come out of college at my company, and I've seen them struggle. I mean, struggle, and I really can't say like, oh, you should leave now, because you know it's going to be tough for you. And every now and then, like someone puts a carrot in front of them of a nice premium or a nice rollover, and it doesn't happen, and they're crushed.
So would you tell a young person maybe that would be a secondary job to have, something whereas it can lead to some type of business that they can set up in the future as a standalone business for themselves. So that
Right.
way they have a primary job. This is their secondary. And as they build confidence and also build a book of business.
I would tell them to work under a general agent or an established agent, part-time.
Okay.
Part-time, learn the business. Don't be contracted as a general agent where you have to hit certain goals. You can get, and you're not going to hit those goals. Work on this person part-time as an associate agent and learn the business, and then let the business grow, and then find out if you want to do it or not. That's
Gotcha.
what I'll tell them to do. Have your full-time job, work someplace part-time, and see if it's for you. You may be a superstar. You may be LeBron James, Michael Jordan of it. We don't know. But don't go into it thinking you're going to just set the world on fire, because once you get in front of a difficult client, you'll get crushed. Because I've been crushed. And it's not nice.
Well, I'll tell a little story about a lady that I met. She generally does continuing education, a sister. And she said, I made sure that every one of my kids got licensed so that they can sell part-time. And also, when I retire and when I'm no longer here, they can take over my book of business. So she looked at that as a way of, passing on, wealth creation and passing that on to her family. But she says every single one of them have to be licensed so that they can write some business while they're doing, as you just mentioned, their primary job. And then later on, this allows their business to annuitize, and I can, if I choose, sell my business to them, or if I pass on, it passes on to them. So
beautiful.
I thought that was a great example. One of the best things that ever sitting and continuing that I ever heard.
Wow, that's incredible. I like that. That's incredible. Wow.
And before we close, I'm going to just mention three things. There was a little lady back in the late 90s that said to me these three words. He says, Beckles, if you're good with these three things, you'll be good in life. And that was to understand that you're born, you live, you die.
And if you're comfortable with those three things and you have life insurance, you're good. You're good. So
is that trademark? Can I use that?
you can use it.
It's
definitely, that's from Mrs. Clark from up in the Sugar Hill area of Harlem. Yes, born you live, you die. She says, if you understand that, you're good, and you get some life insurance, even better.
Even better. I like that.
All right, so let's close out on that. You know, our guest today, Travis Hite, New York Life Insurance. I really appreciate you coming on. It's been a fun hour, plus a few minutes, but it's been good. You know, where can people find you?
Oh, can I give it all my information? That's cool?
Yeah. Dude.
My man. New York Life Insurance Company. I'm located in the Gray Bar Building, 420 Lexington Avenue. You can reach me at 646-227-8604. And my complete name is Travis Hite.
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 All right, beautiful. Thank you for that. Are you on Facebook? Do you have a business? You guys are on Facebook with your?
Well, I'm on Facebook. I haven't set up. I'm not a social media.
Not for your business.
Nah, not for business. It's too much compliance with that. It's too much compliance for that. But if someone wants to reach out to me on Facebook,
Travis
say Travis is Travis D Hite. Middle initial is D. Travis D Hite.
All right, beautiful.
There's a lot of Travis Hites. It's Travis D Hite. Reach out to me on Facebook and say, I heard you on the podcast, and can we speak? It'll be great.
All right, perfect. So that folks ends the estate planning life insurance. And this is part one. We will have a part two coming up. Our guest speaker will be Thomasina R. Thornton, counselor at law, where we will discuss the following, which will be legal contracts such as power of attorney, healthcare proxies, wills, trusts, probate, guardianship, and much, much more. So part two, definitely check this out. And this podcast can be found on Apple, Spotify, SoundCloud, Stitcher, Spreaker, and all major channels. This is the Justifiable Noise Project, where we want you to like, share, subscribe, leave your commentary. Our email is thejustifiablenoise, noise with a Z, @gmail.com. Justifiable Noise at Facebook, Instagram, YouTube. And for Twitter, it's a little bit different. Twitter's always different. It's Justifiable and the word THE all together. Justifiable THE. So thank you, folks, for listening in. Thank you, Travis Hite. And look forward to bringing you another podcast, as I said, that'll be part two to estate planning in the next few days. Be well, everyone.